Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, July 8th, 4:45 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida with the Big Show. That is the expanded edition of the Revere Market Insight video where we take a look back at the prior week, take a look ahead at next week, and update the world famous 21 over 21 leaders list. I should say review, not update, because not a single stock knocked off from last week to this week, and that's a sign of the strength that we've seen in the market this week. So let's get into it. State of the market. Still in a correction from the standpoint that we're beneath the long-term 50-day and long-term 200-day, medium-term 50-day moving averages, but we are in a short-term uptrend as we turned above the 21-day short-term moving average. You can see over here on the trend gauge. I still have leaders marked neutral. I went back and forth a lot if we should move that to uptrend or not, but what I really want to see is more liquid leadership, stocks that big institutions can really take a big stake in. Haven't quite seen that yet. But we're certainly on the lookout for it. So we're staying with neutral and market leadership. But as I said, multiple closes above the 21 in the Nasdaq 100, the Dow, and the S&P 500. Mid caps just falling slightly below, as well as small caps. Medium term under the 50-day moving average. Arrow has turned green. We had the Nasdaq 100 rejected at the 50-day today. Not a surprise on its first visit. We'll see what happens next week. Long term, still firmly under the 200-day moving average across all 5 of the major indexes. So what happened today? Pre-market, we had the jobs report come out and it was stronger than expected. Strong job market means that the Fed, the way the market had its initial reaction and what the pundits were saying was interest rates should continue to go higher and the Fed should stay on the course that it's under, because we need to see demand destruction in order to bring inflation down. So initially, decent sized gap down on the futures, but slowly it was reclaiming it as we got closer to the open and then closed near the top of the range on the day. I'm calling today a win for the bulls because of the reaction to that to that positive news that could have been interpreted negatively. Let's call it that. Mostly red on the day on the indexes, but not very red. G6 just down a fraction, S&P 500 down less than a tenth. Nasdaq 100 up 0.13, Dow down 0.15, mid caps down 1/3%, Russell 2000 just barely negative, diversified global 60/40 stock and bond down 0.13%. In-house we were slightly positive. I'll talk about our trades as the show progresses. And then we'll do the tail of the tape and we'll update the 21 over 21 leaders list, and well, not update, as I said, review. So let's dive into it now, but first let's dive into the team here at Revere. You want to come on board. You're going to have a lovely conversation with America's fiduciary, Dan Stewart. He is the president and majority partner, and you can reach him, Dan at revereasset.com. A lot of people coming on board lately. Dan's having a lot of conversations with them because they understand the practicality and common sense of our trend following approach. Participate in market uptrends, dial back a little bit if the market starts weakening and going sideways, and get the heck out of the way if the market is in a bearish phase. That's what we've done very well this year. If you've been following our videos, you're aware of it. If you saw my interview with Richard Moglen, you're aware of the strategy that we employ to do that and the history behind it. Give us a shout. You can email any of us. I already mentioned Dan. Also, Tim, Hunter, Muriel, or Don at revereasset.com. Or you can phone 855-REAL-WEALTH. That's 855-732-5932. Okay, let's dive into the charts now, and let's bring up the tail of the tape, and let's go through this. So, already talked about correction, short-term uptrend. We're still facing the same headwinds. Strong dollar, although the dollar came off today as stocks strengthened after the open. We're still battling inflation, obviously, the Fed tapering in balance sheet reduction, rising interest rates, and Russia-Ukraine. Sentiment, the put-call ratio at a 0.94, nothing to take note of that either way. VIX continues to come off. This is a pretty low VIX entry considering where we are on the indexes. Fear and greed has been improving from extreme fear. Now it's at a 30. That's just fear. So bull case reclaimed on 7.7 and confirmed on 7.8 with two closes above the 21. Bear case, we're still holding on here. We're kind of in a mixed scenario here. We want to get back above the 50-day moving average solidly before we totally take the bear case off the table. So mixed time frames, partly bullish, partly bearish, but lately the bulls have been winning. So I mentioned the jobs report. Rates went up, futures went down afterwards, but as I said, futures strengthened into the close. What we were watching today was this 38.50 and the 21-day exponential moving average support area on the S&P 500. We pulled back, that held, didn't test resistance up at 39.45. Nasdaq 100, same thing. We got within less than 1% of this 21E, but bounced higher into the 50-day moving average, and that resistance held, so that's a little bit of a negative, but really not a surprise. Normal kind of spot to rest after 3 up days. I'm calling it a win for the bulls. Biotech continues to be strong, as well as ITB, which is home builders. Bonds weak today, XME, home builders, XLB, basic materials, retail, and China. So when the Nasdaq 100 ran into that 50-day moving average and failed to get through it twice, we sold our QLD, booked a small profit for that, but we did add to our SPLG, that's the S&P 500 long, after it successfully tested and bounced at that 21-day moving average. So net, little drop in our volatility adjusted beta. Bottom line, as I said, rest after 3 up days is a win for the bulls. Let's take a look at the charts here. So you can see second close above the 21-day on the S&P 500. Normally, if it's a second close and it's lower, I don't count it. But the fact that we came off the lows after the pullback pre-market and any weakness was bought today. Let's look at a 5-minute chart here. We started out down here pre-market, got all the way up here by the open, a little bit of a dip, tried to sell it off, but it was bought immediately, made a higher high than yesterday, pulled back, formed this big cup, and this is flagging into next week right around 3,900. So we'll see how this intraday cup formation resolves. Let's go out to a 30-minute chart here, and you can see this 3,900 area, a critical area, even more evident on a 60-minute chart. As you can see, it was a battleground area back here in the end of May. Then it's the same area where we had that first gap down here in mid-June, failed to get back above it, challenging it now again. This is really a key battleground here around this 3,900 area. So let's see what happens next week. But for now, 2 closes above the 21, and the 21 slope has turned up. Let's go to the Nasdaq 100, and you can see here the 50-day moving average 296.84. Let's go to an intraday chart here. We tried to get above it twice, failed each time. So, but again, that's the first test of the 50-day since we failed here back in late April. Not surprising that we failed the first time. Bulls want to see a clear break above this next week, and we'll be fine if we get to see that. So let's go to the Dow Jones Industrial Average. You can see 2 closes below, similar action to the S&P 500. Good to see that. Third day up off the bottom, natural spot to rest as we saw with the other big cap indexes. Mid caps can't quite get above the declining 21. Small caps, 2 closes above the 21. I want to point out the strength in something that we own, IWO, small cap growth, member of the G6. 2 closes not only above its 21, but also above its 50-day. This is where the strength has been recently in the small cap arena tied to the growth stocks that have been so beat up. I've been seeing a lot of them break out, a lot of them that are too thin for us to buy at Revere, but it's confirmed by the action in the growth half of the Russell 2000 index. So good confirmation there. So we went through the indexes, went through the tail of the tape here. What are we looking at for next week here? So the 50-day moving average, 39.73. Let's go back to the S&P 500. And that's a big area. Just like we're there with the Nasdaq now, we're below it on the S&P. Depending on which sectors outperform, the fact that interest rates did rise today, rising interest rates is what you'll see with a falling TLT. Let's take a look at the TNX, the 10-year here. Rising interest rates affect growth stocks more than they affect value stocks. So that's certainly something to keep an eye on IWO and also with the Nasdaq 100 because it's tech heavy and most of those qualify as growth stocks. So certainly the inter-asset correlation is something that we'll be looking at next week. Next big area to get through, the declining 50-day moving average, as I said, on the S&P 500. So let's go to 21 over 21 now. As I said, no changes from last week. These are sorted in ascending 3-month relative strength. Let's start with Chewy. This has just really continued to look good. It bottomed before the market did, had a great earnings report, big 24% one-day move up. That gets it on our radar. How it acts after that is what keeps it on our radar. Some insider buying, pulled back, held to 21, and then the relative strength line ever since its earnings report has just been trending higher. PDD, only Chinese stock in here, flagging this week, sitting right on the 21. Celsius, nice breakout on volume above the 72 level and flagging higher on declining volume, but holding the price action, which is not something we saw in a long time after breakouts for leading stocks. And that's certainly something that makes bulls feel good, especially bulls in the growth arena, which is where we are. GTLB, really nice flag after coming out of this consolidation above the 21. Zoom continues to act fine, going sideways above its 21. SWAV, tempted breakout today, pulled back in a little bit. Market didn't really do too much, still up 2.6% on the day, holding this 8 EMA. UTHR, medical stocks have been acting well. This one's near all-time highs. Enphase, extreme volatility this week. This thing was just absolutely getting hammered Tuesday morning when we opened, but it bounced at the 200-day moving average down at 181, all the way up to 216 by the end of the week as money came into solar stocks and its relative strength line certainly showing off its strength as well. Monster Beverage continues to trudge higher. LLY, Lilly, continues to consolidate with an upward bias above its recent base. Vertex Pharma, all-time highs. What can you say about a stock that's at all-time? Let me confirm that's at all-time highs because it's not. So back here in 2020 was when the last time it's had its heyday. Huge consolidation there, puts in a handle now trying to reassert itself, and it has been a relative strength leader all year, as you can see by the rising RS line. PWR forming really a kind of a cup on cup, but relative strength is at a new high. This looked really nice, had this really harsh sell-off with that last leg down in the market, but it's righted itself. Dollar General continuing to trend higher very nicely along with BJ's. Theme here, people looking to maximize their dollar at discount stores. AT&T, dividend darling, really not growing in sales or earnings, but putting in this big V-shaped flat base. Northrop Grumman almost knocked off early in the week, but this big down day But again, this bounced very similarly to the way that I showed end phase bounced and closed the week strong. Merck, medical stocks outperforming. This is very nice consolidation after this really strong 5-day move up when we saw a bunch of money flow in to the medical sector. AutoZone, continuing its relative strength, putting in a little bit of a flag here as it came out of its cup and handle. T-Mobile continues to show strength, a little bit of a flag on lower volume the last few days. AMT, American Tower, trying to finish its cup and handle, sitting right on the 21. Volume really drying up on this. This thing really moves when it does move, so we're paying attention to it. And CNC, attempted breakout today out of this double bottom. The volume 51% above average, up 3%. Really, this whole group is moving, this medical managed care group, part of the big move with the medical sector and biotechs also. And make sure you watch our podcast this week. Hunter and Tim were out, but Alex joined us and he walked through. We actually took a deep walk through into this biotech, particularly this XBI, and how it showed relative strength. Also, ITB and XHB. Those were really two ETFs and sectors that we dug into pretty deeply on our podcast, and we got to see some things that we normally don't see because of some of the indicators that are on MarketSmith charts. I was driving the chart show this week, so we were able to point out some subtleties in strength with these two. So biotech and builder, something that you wouldn't think with rising interest rates, but they're continuing to show relative strength. Are they looking down the 6 months down the road, perhaps? They sold off before things got bad and before interest rates started rising. Maybe they're going back up in an attempt to see to take a look into the future. The market, after all, is the best forecasting mechanism. And that's going to wrap it. As always, love to hear from you. You can email me, don@revereasset.com. You can get a hold of us by calling 855-REAL-WEALTH. Finishing up the week ending July 8th. This is Don Vandenbord reminding you it's not how much you make, it's how much you keep. That's why we're trend followers here at Revere. Just the facts here, no opinions. Thanks for listening and have a great weekend.